the sound that's in the air. It's rock and roll. 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 It's rock and roll.
And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Well, surprise, it's Financial Fitness Monday. Today, we're all heart, no chart. Well, some chart. Monday, the Harry and Meghan of the work week. And we're here, well, to try to make it easier for you. Well, Danny's here. Lance is taking a well-deserved break. Well, and break is relative for Lance, because no matter where he is, the man's writing and working. But from a different location, from a different bat cave today. But we're going to talk about all kinds of cool stuff. Well, Dow futures are mucky. You know, we expect this sort of kind of malaise in the morning, down 8 points. Obviously, Danny, today might be a big day. We don't know. We have this debt limit right up against the wall here. We have a president that seems rather complacent about it and keeps blaming everybody else. But today, they seem to be more optimistic. They're going to come to a deal. It's going to be interesting to see the what kind of a deal this is, isn't it?
Well, it is. I think they all want something different, right? I mean, obviously, you're looking at Republicans coming out saying, hey, we need to start making some additional cuts. Democrats are saying, hey, these bills have already been passed. Why are we going to come back and cut? Specifically around the Inflation Reduction Act. I think, Friday was a no-go. Everybody left meetings, walked out. Market didn't like it. Evidently yesterday, they're coming back together today now. So
that did change the tone Friday, didn't it?
It did. It changed it quite a bit. I think one thing most people are watching for is this is obviously the headline news, but lots of Fed speakers today. We have 3 coming out, I think 5 or 6 for the week. Plus, we get down to Friday, a lot of data coming out. PCE is going to be the big one, especially considering that it seems to be what the Fed is targeting on.
And we know that inflation, especially some of the numbers they look at, have been uncomfortably stubborn. And when you look at sticky price CPI from the Atlanta Fed, it's flatlined. It hasn't gone higher, but now it has to head in the right direction, which is down. And we're not seeing that. So this PCE number is going to be very important, to your point, Danny. And it really creates a conundrum for the Fed, because you have to think about, okay, we've got rates at this level, but are we going to wait? Or should we increase rates again? My thought is probably they're going to be much, much more data dependent as they go forward. They're going to look at the data and then decide, regardless of the PCE is going to be. It's going to be, again, we never know how the market's going to react. Obviously, if PCE is hotter, we know how the market's probably going to react.
Yeah.
If it's flat, I'm not really sure. And what if you're in this period where inflation is stubborn? And that's what we've that's what we've seen. We've seen this. This is like a slow roll accident. You ever see those crash tests with the cars and the dummies in it, and then they do it in slow-mo? We're in that kind of slow-mo crash right now. It's going to take a while for inflation to subside. So, yeah, lots of big numbers coming out
Yeah,
that the market will trade at.
I'm not sure the markets know how to react. I mean, look at CME Fed forecast. Just at the beginning of last week, it was like 84% probability they're going to keep rates the same. Then they dropped all the way down to like 63, I believe is what it was. And then this morning, back up to 74. So really trying to digest the data, understand what it actually means, what the Fed, how they're going to react. I think we're going to get a little bit better information here once we hear these Fed presidents come out and speak.
In some ways, and we said this after the Great Recession, I know I did, we're in uncharted territory for data because something changes in the consumer psyche, something changes in society. After the financial crisis, what I was worried about, and I put it on Facebook, was the rise of more socialism, that we would see much more of the government open the door for much more of a socialist kind of environment going forward if we didn't course correct. And obviously, we're gone from socialist light to maybe not so light. So every disaster, every issue creates a different set of concerns that maybe the data doesn't reflect. I mean, I think eventually the data goes back in line, but it deviates so dramatically. And I think in one of those periods, Danny, where that data is off the guardrail and we're all guessing, right? Yeah. We're all trying to figure it out. And I think that's a big concern. When you look at the market and you see this big tech rally and pretty much this rally across the board being just a few companies and the breadth of the market being so poor, money's trying to find a place. It just doesn't look like it wants to stay there. Obviously, the AI story has created a lot of momentum, even though nobody really can tell me what AI is. Like, oh, AI. It sounds like Ricky Ricardo. AI. But nobody really knows what the deal is, right? Like, there's no company that's directly involved, possibly, but there are a lot of companies involved in it, and there are a lot of industries that will either participate in it, benefit from it across the board. But, it's the narrative. And that fits right into the NASDAQ 100. But I think, as Lance has been talking about, we've seen this tech sector become really overdone. So we've been putting some money in some of the out-of-favor areas as well. And I think that sometimes that's difficult for clients and for people to start putting money into areas that are not overheated, fundamentally look like they've been beat up, but they're, we've added a little bit to energy not too long ago as well, because these are areas that are people, there's not a lot of light shined on them, right? So we also as managers have to find value. It's not just all momentum trade. Can't have your whole portfolio, because to your point about the data and where we're going, this can shift so quickly.
Well, Ken, I think, you just mentioned market breadth, and then, that's where I think there are a lot of opportunities that are out there. I mean, think about this. We've had some bubbles that have popped already. You look at crypto, you look at SPACs. I mean, where have SPACs gone? I haven't even seen that acronym anywhere.
Oh, man, those things have...
I mean, that was like the talk of the day.
Who's the
every
dude
day
that
for
really
months.
Started it? He disappeared. He's not even on TV anymore. I think
he's sitting on an island somewhere. Guy made his money and he ran, right? So, but what you're getting at, I think, is really important, is that you do have to find those out of favor areas that I think have that potential for that upside. Looking at a lot of reports here over the last week or two, some of them, we're getting conflicting data. If you look at Target, you look at Lowe's, Home Depot, versus you look at Walmart. Walmart's still expecting growth. Some of these companies are benefiting in other ways that some aren't. And if you look, I think one thing is look at the consumer in general. I think it's been a lot more resilient than anticipated. Maybe it's coming out of the pandemic, but people are still spending. They're still going out to eat. You go to the airport, you go to a bar, you go to any of these places, and it seems like they are still busy, just in general, compared to what you would typically see, right?
Yeah, I think people have redirected their spending. Home Depot, everybody tried to renovate everything, right? You couldn't get a hold of a contractor. Oh, when can you do a deck? 2027.
And they're throwing these crazy numbers out and still getting
and
jobs.
getting people paying for
Yeah.
it. Yeah, it's not that way anymore. So when you look at the NASDAQ 100, call volumes have hit the highest level since 2014. Do I want to go ahead and put money into the NASDAQ 100 or take profits? I think smart investors know the answer to that. All right, we get back. We got more of, it doesn't flow well, Financial Fitness Monday. Got to come up with something else. Money Monday. Money Monday coming at you. We'll be right back.
Investment news you can use. Delivered at the speed of the internet at realinvestmentadvice.com.
Why, Red, whatever are we gonna do over this hot, lazy summer?
Don't you worry, little darling. We gonna break our money malaise. Don't let the summer doldrums sap your money's worth. Register for our next Candid Coffee with Danny Ratliff and Richard Rosso with summertime tips for your idle cash. Saturday, June 3rd. It's our half-year financial checkup, breaking your money malaise this summer. Register now at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So, Saturday, June 3rd, we got a Breaking Your Money Malaise. Oh, Money Malaise Monday this summer. So we have some tips for you. How do you break out of the muck that the market's in? What do you need to do for your household? Well, yesterday, as I'm working on this presentation, I'm thinking about all the summer songs. I wonder if Brent Clanton has a favorite summertime song. Is there a song that you hear that automatically brings you back to that summer of your youth when you and Abe Lincoln would go ahead and walk through the fields barefoot and read your books?
Yeah.
Any summer song you really?
Seals and Crofts, Summer Breeze.
That's like number 2 on my list.
Yeah.
That's a good one. Seals and Crofts.
What's number 1?
I think I put Summertime Blues by Eddie Cochran.
Okay, yeah.
Yeah, it's an oldie. But I found some, I couldn't go past like the 80s, man. There's no real good music after that.
The Beach Boys.
Yeah,
Sail
they were a
on
couple of
Sailor.
Beach Boys. Yeah. Well,
Boys of Summer.
Boys of Summer,
Yeah,
right? Some of the Beach
yeah.
Boys stuff in there. Then I put some songs in that came out that reminds me of summer because they came out around that time, like Brandy.
Yeah.
You're a fine
girl.
Right?
Yeah.
So songs that people listen to that remind them of summer. So there are songs that you might that may not have any relation to summer, but we're going to talk about what to do with your cash, planning ahead for the next season, things you can do that you have control over. This mucky market is something you do not have control over.
Peter and Gordon, summer song.
Did not include that one.
Yeah.
That is a good one. Peter and Gordon
Danny's
always
looking at me like,
they
who?
always sang like they were neutered.
No.
Yeah. There was something breathless about them, but I liked them. They were very calming. They were very. Hi, Danny. How are you? Let me sing you a song. My name is Peter, and my name is Gordon. And then you would like summer yourself to sleep. But they were a big hit there for a while.
I've been corrected. It was Chad and Jeremy.
Either one, man.
You know, they had all these duos.
They did, and they all sounded breathless, like someone kept punching them in the gut.
But it was good stuff.
It was good stuff. Yeah, it was. It was good for the time. Today they would be strung up and thrown into the ocean. What are you guys doing? Open your mouth and sing. And where are the dirty words? So, but yeah, all great. So we want to come up with these tips for you, things you need to do, because the market, Danny, is frustrating. You know, when people are sitting stagnant and they don't know what to do, or they feel like, hey, I'm not making any progress, you got to step away from that and look at the big picture and realize this is a very short period of time within a very long time that you're probably going to invest, even if it's a decade. So remember, you're going to go through these periods, and a consolidation like this, I don't think is unhealthy. This is corrective. It's just, I guess it's somewhat painful because it's a drag, but having a time correction and working through valuations over time feels rougher in some ways. It's like, water torture to some degree, but it does help with valuations, right? I mean,
we looked at how expensive it's been, and you're buying something that's expensive, hoping that it's going to continue to become more expensive.
Yeah.
And, this is what most people wait for, but I do believe this is psychologically, it's just difficult.
Yes.
Nobody wants to see this. And I think the other caveat is that now you can get paid for cash. So it's like, all right, well, and I think that's where it's important to have a little bit of each.
That's a good point, though, because people feel complacent because, hey, if I'm getting 4 or 5% on riskless money for the most part, I'm going to take that over equities.
Yeah, I find, though, that the people long-term investors, people who've done this for a long time and have done well, kind of they understand the story, right? They understand what's going on and why we're doing this. We also have some people that get really emotional. And I find that the ones that have been emotional historically, like have a handful of people said, listen, never really made any money in the market. And in times like this, you start to figure out why. Because they will go all to cash. But the problem is they'll get back in when it's way too late. Kind of like we were getting a lot of calls a year or two ago. People been like, hey, I've been out of the market since 2008.
Yeah.
I need to get back in. What do we do? And it's like, man, this is tough, right? So you begin to step in, but even for that, even if you didn't have a terrible year like the majority of the market did, it's still, I think that, you'll probably people a little bit more prone who invest that way to say, hey, let's go to cash. Let's hang out on the sideline. Let's get back. And you know what? I'm okay with that too. If you know yourself and you can't sleep, I don't think there's any amount of return or interest that's worth it. However, you just need to understand and know that long term, when are you going to get back in? When is it going to feel good? Because when we really want to buy in earnest, most people won't do it. Right? I mean,
yeah, I agree.
That's the problem.
Listen, I think there are a lot of people who have problem with their advisors, and they're the problem. I mean, your advisor is not perfect. If your advisor is trying to do the right thing, they're making decisions. They're not just looking at decisions for this week. They're looking at decisions for 1, 2, 3, 5 years down the road. So just because you're emotional over it and you've always made bad decisions and you're going to continue to do it, that's not a reflection of your advisor. Sometimes an investor needs to look in the mirror and say, maybe it's me. Maybe it's me that's the problem. I'm never going to find the perfect advisor because maybe I need to assess what I am, what I want, what I'm looking for, and maybe that unicorn that people look for is just not out there, Danny. I mean, every advisor that I know, the good advisors, they try their best. And sometimes what an investor wants to do is absolutely against their own best interest.
Well, but I think this is also where you need to understand it. Who are you paired up with as well? This is where making sure that you understand the philosophy, what's going on, how you're going to invest. is this a buy and hold strategy, and are you vehemently against that? Or is it something that's going to be a little bit more nimble? Like, I find it, because we are nimble and more active, that sometimes it's difficult for somebody to understand, like, okay, why would you guys go, you have much more in cash right now, or you're beginning to put more into equities, and if it's completely against what I feel is going to happen. I think that's the difficult part, is that when you operate with a discipline and it's not a all or nothing strategy, if somebody's on the other side and they say, look, I don't feel good about any of this, what are we doing? Why would you go buy a stock, or why would we look to go invest in bonds? They had a terrible year last year. Right. And it may be that's the reason, right? You stick to the discipline. You understand. You start adding exposure, or you decrease it when things have done really well. And I think that's probably really difficult for most, because it goes against. It's counterintuitive, is what it feels like in a lot of ways, right?
The best investors, or people I know who do a good job, are financially. They're aware of themselves. They're aware of their own pitfalls. They understand where they're weak when it comes to money, and they understand where they're strong. In other words, they really objectively look at themselves. Say, I always make this timing move at the worst possible time. You have advisors that are buy and hold. Right, you got to start with your philosophy first. But if your strategy is with an advisor that manages risk, you can't expect your advisor. Excuse me. You can't expect your advisor to not lose money. Your advisor might cut the bleeding.
Yeah.
Minimize your loss. That's important, right? Not ride you all the way down. But if you have an advisor that's active, but that advisor is going to capture some of that downside. There is no advisor out there that consistently is going to go, well, market's down 20% and I'm up 4%. Madoff did that every year. Magically. It's not out there. And if it is out there, it's luck. And it won't happen. It won't continue. So understand the path of the variable assets. I talked to someone Saturday, and he said, I'm just not good with downside risk. I don't like it. And I said, well, nobody likes it, so don't give yourself a break. Nobody likes to lose money, even in the short term. Okay, but if you want zero downside, then there are investments out there for you. But you give up something with it, right? I can go into a fixed indexed annuity with zero downside, but I drop my liquidity. I don't have real liquidity from an asset like that.
And you drop some potential upside too.
Potential upside, but I know consistently I have no downside risk. I can go all in bonds and ladder them out and go away, but then I have other risks. There's nothing, no investment out there that's riskless. You have to compromise between how much you want to take in risk and how much you want to manage and minimize it. There's no free lunch here with this stuff. Speaking of free lunch, did you see Meta was fined $1.3 billion over EU user data transfers to the United States? The Irish Data Protection Commission to suspend is involved in this. $1.2 billion. Or 1.2 billion euro, $1.3 billion. Ooh,
it's a lot of money.
That's a hefty. That's a lot of cash. Facebook said it would appeal the decision and the fine. It just shows you how your data is everywhere. Transferring EU data to the U.S. U.S. data is going to China. China's data is going who knows where.
Well, I think it's everywhere. I mean, did you hear about the reporter with Financial Times where somebody from TikTok actually called her, and she was reporting on TikTok. She was in London, and they stole all her data. Basically, they could see where she was, what she was doing, and somebody at TikTok actually called her and let her know. Like, they were, hey, you need to go check this article out. So there's an article that was written strictly on this, and it was mentioning a Financial Times reporter, ended up being her, and they knew, like, everything about her. Wow. So she said, is this me? And the person at TikTok said, yes.
Duh. Financial Times, going downhill. So when did the greatest generation turn into a generation that just rolls its eyes at retirement and is lost? Well, this is a survey compiled by Northwestern Mutual. We're going to go over when we get back here on Money Monday. Stay tuned.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Wow, Red, whatever are we gonna do over this hot, lazy summer?
Don't you worry, little darling. We gonna break our money malaise. Don't let the summer doldrums sap your money's worth. Register for our next Candid Coffee with Danny Ratcliffe and Richard Rosso with summertime tips for your idle cash. Saturday, June 3rd. It's our half-year financial checkup, breaking your money malaise this summer. Register now at realinvestmentadvice.com. Candid Coffee with Ratcliffe and Rosso. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Part of the problem of the average American is that we've just chosen to live well beyond our means.
Basically, you can buy anything you want out there on a payment. You need new underwear? Go get it on a payment plan.
Underwear can be expensive. If you buy some Jimmy John's, they're not cheap.
Jimmy John's.
And
Sandwich
the point
underwear?
is,
What is this?
But Tommy John's, thank you.
The Real Investment Show podcast.
That's why I just don't wear underwear. It's too expensive anymore.
At realinvestmentadvice.com.
Going commando is going to become a new thing for the poor people.
It's going to be a...
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell report, Candid Coffee, and Lunch and Learn replays, plus each day's radio show. Subscribe and bookmark our YouTube channel or just click on the show links at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And we're back. So, you can join us on YouTube. We have great groups on our YouTube channel. James Butler's on there, and James has some good stuff. It's just, his words are good, but I don't think a lot of investors can do it. Buy low, sell high. I think most investors want to buy high, sell higher. And there is a complete body of knowledge around that it does work for trading purposes, right? Momentum trades are valuable.
absolutely, but I don't think that most of the population isn't prepared to do that. I mean, a lot of
I don't
people are
think
really
so
good at buying. They're really bad at selling. Right?
Exactly. I mean, like Investors Business Daily, since I've been reading since 1989, has been based on that premise. You don't look at the 52-week low list. You look at the 52-week high list, right? But that's a philosophy and a strategy. And people don't want to buy value. I think most investors are not value investors. They don't want to buy low. They don't. It's just not ingrained in us. It's buy high, sell higher. But yes, I totally agree. And then I like his triple Ps: patience, position, sizing, persistence. I think those are great, right? And you wrap some rules in there within, right? Expand out on patience, position sizing, and persistence, right? You look at that. Like if I want to buy into beaten down companies that I think are fundamentally strong and they don't look good technically, maybe I know my position size. I need to know how to build that position size and stick with it. Be persistent unless the fundamentals change and then I made a mistake. It's okay to say that I made a mistake and minimize the loss. And I think a lot of people have a hard time with that because I am the world's best driver. How many people say that? Like, I drive better than everybody else, as people are screaming and yelling and running away from him. Right? It's our nature is not to invest. We're not good at it. Generally, we have to know ourselves to do it. Well, listen, Generation X appears to be looking toward retirement and going, whatever, sure. So that's your generation born from 1965 through 1980. So the oldest are 58, the youngest turning 43. So about 55% predicted they will be financially unprepared for retirement. Whatever, I don't care. And they were more likely to say they will be unprepared more than any other age group. And that's a survey by Northwestern Mutual. Northwestern Mutual does a lot of cool surveys. They looked at 2,470 U.S. adults age 18 older, 640 Gen Xers. Listen, it's all about, fear of missing out, right? Living for today, nothing for tomorrow. So it's a bit scary to think about it, but this age group, and it's not just Gen X. It's not just Gen X. I know a lot of baby boomers are doing the same thing.
Well, that's right. There's a lot of people in general. But it's interesting in this survey, they also said that they were the biggest cohort to say they did not, only 45% of them expected Social Security to be there, whereas the other generations thought it was 55%. So you think you're going to have less coming in from Social Security, right?
Right.
More so than anybody else, but yet you are unwilling to save or to do the necessary actions to prepare yourself.
I
don't get that, right?
I don't either. If I think Social Security is not going to be there, then I'm going to be paying myself first at double the rate.
Yeah, more
triple.
So.
I'm going to be doing more so.
Yeah,
but
doesn't make sense.
I understand consumerism and I understand, but we've lost the ability to be disciplined. And it comes right from our government, too. They're not disciplined when it comes to spending. Why should we as a household? Because we can't print money. But it seems like the government prints us more and more money. So maybe they believe there'll be some sort of social safety net, or they're going to find a way to do it. I think Gen Z, actually, which are your 20-somethings, are actually more practical. They didn't grow up in a period of time of prosperity. They really grew up in a period of time of economic stagnation and high debt. And I think that they're going to go the other direction for the most part because they tend to be better savers than the other generations. I mean, I see it in my own kid.
Yeah.
They don't live large. They rather spend more on experiences. They prioritize other things. And they work hard within the period of time they're available for work, and then that's it. And they don't want to be controlled, and they will save as much money. I mean, there's some elements of it I really admire and some that I scratch my head. It's the same thing with every generation. But yeah, I noticed that Gen X tends to have fallen through the cracks when I read a lot of studies about their prowess to save.
Yeah, I mean,
they're financial free rangers.
Well, you should be, 43 to 58 should be within peak earnings years. You're becoming empty nesters. You should have more income coming in.
Accelerate your savings,
maybe
right?
Expenses not going out as much either. But yet 38% said they've not even looked for information about retirement, let alone talked to a financial advisor, and were more likely to have resisted retirement planning than any other group.
Yeah. I don't get it.
Yeah.
Not the Gen X's we work with.
No, not at
There
all.
are the outliers.
No, that's absolutely right. I mean, but there is within any group, right? That's why
There
it's
are. There are
you know,
super
it's a group
savers in
survey,
every
yeah.
group, right? It's just that I think the super saver that cohort shrinks depending on the generation.
Yeah.
Right? I mean, obviously, baby boomers learned from the greatest generation who were a little bit overboard on saving and debt. Like they were the extreme because they lived through the Great Depression. And, you know, they wouldn't enjoy their lives on anything. That was, I mean, my grandparents, I don't know about you, Danny, but the greatest generations in your families, they were always savers first, right? Frugal, saving.
Tremendous. Yeah.
Right?
I mean, go to resale shops, clip coupons. I mean, try to save $1 any way that they could.
My
right?
grandmother can make a Cool Whip tub last forever. Everything was stored in it. I'm like, Grandma, this smells like meatloaf, and this is not meatloaf. You know, like, in other words, everything
Was in one spot.
was saved.
Yeah.
You used everything. You know, the bread come in the packages, like Wonder Bread.
Yeah.
We saved
The bread package?
bread package to put stuff in. I'm like, Grandma, come on with this. You know, so, but yeah, there are some of those habits that would be beneficial on a larger scale, right? Not so extreme. But everything seems to be extreme on the other side of things when it comes to spending. So, but we're here to help you, Gen X's. There are some Gen Xers doing a darn good job. It always makes me wonder, Danny, we talk about this a lot. What does a retirement lifestyle look in the future? Like I wrote in my book in 2012 that there would be these sort of senior communes, right? Because demographics, less people getting married, less people having children, more seniors are going to be living alone. They're going to be alone for a much longer period of time. So you're almost going to need this community support network, right? That is going to be available. And at the time, about 10 years ago, there were all these communities coming up, these high-end like RV communities where people had communal gardens and kitchens. I mean, I think that's the future for a lot of retirees because they're not going to be able to do it on their own at all because they're not even going to have the family caregiver support.
Yeah, I mean, you look at right now, you see the generational, household at the moment where you have, parents living with their kids. They're
at the highest levels, right?
With,
Since like World War II.
Yeah,
Yeah.
But now to your point, because the lack of childbirth, there's going to be a big generation here who's going to have they're going to have to rely on each other versus family. So maybe it is you've always been a big fan of the tiny homes. You're going to have some type of commune or community where you see people living together and kind of hey, I'm going to rent this room, you rent this room in an apartment, that type of situation, just to take care of each other.
Yeah. EC says, Google the villages. No, I'm not talking about the villages. I think that's the higher end of it. And there are those communities as well. But I'm talking about really like Danny's talking about. Plot of land, 8 or 10 tiny homes or RVs and people having this community kind of thing. I just don't know how else people are going to do it. I just don't.
It's not going to be easy.
It's not.
Especially if you don't have any Social Security. Or retirement savings.
Or say for example, we don't fix Social Security, right?
Yeah.
And we talk about this, that we keep track of the trust fund, and I do think it'll be there. We do think it'll be there because otherwise you're going to be really tripping over people in the street. No kidding. It has become America's pension. But what if there is a 25% pay cut? Or what if they say, listen, the full retirement age is no longer 67, it's 68. If you're born 1974 or later, your new full retirement age is 68. The delayed credit is 71, 72. Who knows? Right? Which portends to being healthier in retirement. I want to talk to you about something that we've talked about here, but something maybe you should look to do as well. So yeah, we have the greatest generation. We have now rolled into the roll its eyes generation.
Think about how deflationary that would be
if
you had that cut.
Oh,
and benefits.
Absolutely.
We wouldn't be seeing disinflation, it'd be deflation.
It would be. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Wow, Red, whatever are we gonna do over this hot, lazy summer?
Don't you worry, little darling. We gonna break our money malaise. Don't let the summer doldrums sap your money's worth. Register for our next Candid Coffee with Danny Ratcliffe and Richard Rosso with summertime tips for your idle cash. Saturday, June 3rd. It's our half-year financial checkup, breaking your money malaise this summer. Register now at realinvestmentadvice.com. Candid Coffee with Ratcliffe and Rosso. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Wow, time flies when you're having fun. Being an adult is so weird. I'm just unsupervised all the time. How unsafe. Danny and Brent know how true that is. Yep.
Oh, yeah.
So we have Memorial Day weekend coming up. Headed to Gonzales. Even though the girlfriend was born here, she doesn't know much about the history of Texas. The New York boy knows about Texas, but okay. But if you want to catch up on your reading, there's a really excellent book. If you're concerned about your health, it's called Outlive. And it's the science and art of longevity by Peter Attia, Dr. Peter Attia. Excellent, excellent book. Talking about the technology that's coming out. To monitor your health, to understand issues before they become problems, diets, exercise. So he says in this book, Danny, if you can work out within your zone 2, which is your heart rate is about 80% above the normal rate, whatever your workout rate is. So you know your normal rate, right?
Mm-hmm.
So if you're in this zone 2, that's the key to longevity. So you own an Apple Watch, it'll actually show you zone 2, but he talks about the incredible benefits of exercise. I mean, more than diet, anything else, the incredible benefits. So last year I talked to Danny and I said, hey, we always do plans. And when we do plans, we try to help people who are looking to understand their whole financial life. We go to Living to 100 and take the test. Take the 40 exam test. It's a lifestyle quiz. It'll give you some idea of how long you're going to live. It's a longevity quiz. Dr. Peel, he does a great job with it. But then I came up with the ideas. It would be nice if every client or everyone who did a plan did 23andMe. Because 23andMe has a health element to it. No, I do not own 23andMe stock or SPAC or anything else. But what's important about it, it'll give you an idea of, based on your heritage, the weak spots, the tendency for you to have certain issues. Prostate cancer, colon cancer. You know, it's no health diagnostic. It just gives you an idea that you are predisposed. So if we have a client that, say, is, and what I was really focused on was dementia, Danny. So if we knew a client had, and then, you know, Chris Hemsworth did this test, and he found out he had the APOE-E4 gene, which is for dementia, right? It dramatically increases the risk of developing Alzheimer's disease. So you have all these scientific elements that enable us to measure our true age. And Peter Attia talks about true age versus biological age. So you, as I always mention, your financial advisor is going to become a health advisor in the future. And I've said this so many times. And there's this article that was in Investors Business Daily talking about this, that if you want to do better planning, and we were looking at 23andMe, if someone came up with this likelihood for dementia, then I thought we would have to have a more robust planning for long-term care. Right? We want to prepare someone, even if they say, listen, I'm self-insured. Well, maybe that's still not enough, because you can live a long time in dementia and it could be very expensive.
Oh, I mean, you're seeing people live 10 years with it.
Right. So I said, so I was like, we've got to find a way to work this into planning. So there's a firm that actually has done this, but there's a powerful link between your genetics and longevity that can be used for financial planning purposes. This is Jay Olshansky. He's a University of Illinois at Chicago professor. He's got a paper coming out, Personalized Financial Planning. Danny, I'll make sure to get you a copy of this as soon as it comes out, using applied genetics. And he says this is the next evolution in wealth management. So he says, if, for example, a DNA test says you have a high probability of living to 90, it probably makes financial sense to delay retirement, continue to fund your nest egg, wait till 70 to take Social Security, robust long-term care strategies. So this is going to connect. There's a firm out there that has actually created software to do this, and I think your advisor in the future, Danny, is going to need to ask you questions you may not feel your financial advisor has the right to know. Your blood pressure, your BMI, your blood sugar levels. This is coming. This is coming. There's no way to not integrate these two. Well, so it's amazing that the professor is going to come up with this, and we talked about it last year, but now it's just starting to become an issue. Man, I would love to pull it in our policy that a client has to go for 23andMe. But I know I can't do it. But boy, would I love to do that, because I think it would teach them so much about their own health.
Well, the more information you're armed with, I think the better decisions you can make. And if we have some type of idea, now obviously nobody knows your expiration date, but if we know here are some things that we could be subjected to.
Right.
And dementia, I think, is a good one. It's a great one to really think about, because what happens if you do start to show signs of it? Number one, what if nobody picks it up? And you say, oh, well, I'm just aging. But now what if you need to go get, legal documents done? You need to do just typical activities of daily living that you may be able to physically do, but mentally, I mean, that can take a lot away from somebody really quickly. So it's not just about, okay, when is my expiration date, but it's about what are the things I can do now to prevent some of these potential illnesses or scenarios to occur. But how can I better arm my family to help make sure that they acknowledge and know about it, and then you can potentially, have help, get around it. Maybe there's some things you could be doing now to prevent it. I mean, there's so much that goes into it.
And I admire this firm is out of Grand Rapids, Michigan, and they have developed a software program that collects data and utilizes it from 23andMe and other types of questionnaires regarding health, because your physical health, your biological health is different from what your health really might be. You might be 63 years old physically, but based on all these tests, you might be biologically, you might be 43 years old based on how your metabolism is and all these metrics. So maybe I have to plan that person differently. That's someone who's 63 and really is 83, right? Because you can't plan everybody just to be 100 years old. And a lot of financial planning softwares assume this, and a lot of advisors do, because they want to sell you stocks, and stocks are the panacea for everything, and stocks are the best thing for long-term investing. But it may not be the case. And it's not just stocks. It's how you claim Social Security. It's how much long-term care you have. So a lot of how people are going to live is their lifestyle and genetics. So if you had this data, Danny, you would be able to create more customized plans for clients. So eventually, I see it here. We're going to have to include health questions inside financial questions, along with financial questions. We're going to have to help you understand how they are linked. And I guess the curse of good health is, Danny, you do maybe have to plan to 100.
Yeah.
And you do have to make certain decisions that are different. But hey, if you're going to have a very healthy retirement, that's great.
But even then, you can live a lot longer with illnesses that
Certain
can
illnesses.
become very costly,
Correct.
right?
Correct.
So you want to make sure you prepare for that financially.
Yep.
Yeah, it's difficult. So no, I think the more information we can arm ourselves with, we're going to be so much better off. Think about what we can do now than even what we could do 5, 10, 15, 20 years ago.
Well, there's a blood test called Gallery right now.
Okay.
You go ahead and send $1,000.
Okay.
Go ahead and send them your blood. They will show if you have a predisposition for any kind of cancer, pancreatic cancer. Now, you may not have any signs of this cancer.
Yeah.
But you have the marker. So some people say, I don't want to know. I don't want to know. I don't care. I'm the other side of it. I want to know. Because what if it's something I can change or do something that my lifestyle can tell me I can change? In other words, maybe I can minimize it or prolong this situation. But there are markers in your blood that will be found through blood tests. And these tests are going to become much, much more affordable. There are companies out there right now doing MRIs. You walk in, right? I think it was a SPAC, but Tony Robbins was investing in this. But you go ahead and for like $189, you get a full parametric scan of your body. So if you could see where your arteries are, are you a heart attack waiting to happen, right? These tests are very positive because they will allow you to get proactive on your health. But this affects every area of your life, especially your financial plan. I am going to plan differently for someone. Not that I don't want them to be comfortable, but I have to maybe look at things like, hey, maybe you need to take Social Security at full retirement age, not wait until 70 years old.
Yeah, that's true.
Right? There are going to be certain things you have to do. So health and wealth are connected. And that book is Outlive, The Science and Art of Longevity by Peter Attia. But I guess if I'm going to roll my eyes at Generation, for Generation X, I'm going to eat whatever the heck I want because I'm not saving for retirement anyway. You want to go get a dozen donuts? Let's go.
Hey, maybe doing themselves a favor, right?
Money Monday. What's tomorrow? Can't be Taco Tuesday.
Sure it can.
No. How's that money related? What's a money taco?
Well, I mean, we can make anything related to it, right? I mean, how many tacos do you eat a week? Just think, if you forego one taco. What would it do to your genetic test and your money? We'll see you tomorrow. Thanks for listening.